Today's lesson is on income taxes and specifically on the gain on the sale of your house. So if you've been living somewhere a while and your home is substantially appreciated and you're thinking of downsizing, moving to a different part of the country, we're going to talk today about how you can get an exemption where you don't have to pay taxes on the gain. Now, it just amazes me. I have a client who's been a client for many years, and she didn't call me till after she had sold her home. I think we had talked about it in the beginning when she first became a client, but she had already sold it. And she was calling me up because she was going to give the money to her kids, the profit from it, because she didn't really need it, but she didn't want to give them the tax portion. And she just assumed she owed a lot of taxes. She was just shocked when I told her. I said, your taxes are nothing, when I walked her through all the rules. And she was very happy along with being shocked. So here's the deal, is that if you sell your home and you make a profit and you're single, you can make a profit up to $250,000 or $250,000 of gain, and it's entirely tax-free. If you're a married couple, $500,000. So that's a pretty substantial gain that's tax-free. Now, you got to have somewhere else to live. And it used to be when you were growing up, my guess is that some of your parents may have actually paid taxes on the gain or the profit they made off the sale of their house, because pre-2000 or before the 1990s or the late, that was the deal, is that ultimately you had to pay capital gains taxes on it. And you might not be aware of this thing, this is a real benefit from the government, is you don't have to buy a home of equal or greater value. You can buy a much smaller home, you can rent, you can move somewhere. It's $250,000 per person, or $250,000 for one, $500,000 for two. Now, the qualification for this is this home that you're now selling needed to be your personal residence. You had to live there for 2 of the last 5 years. Doesn't mean you need to be there every day. It needs to be designated as your personal residence. I know when I used to own a beach house, you had a number of people down there that changed their driver's license and their car insurance and spent a good part of the year down there just to deem their beach house, which substantially appreciated, and they were going to later sell. They wanted to show that as their personal residence. Those were people that were schooled on this thing. And you need to be pretty clean about this. And also included in there is if you've substantially improved your house and you've spent money to make it worth more, that's going to be added, those improvements are going to be added to the cost basis of the house. So, if you have a very valuable home and you spent a bunch of money adding a room or remodeling or that sort of thing, you're going to be able to count that as your cost. So this is important within the context of retirement planning. I hope this was helpful. I'm Hans Scheil, and I thank you for listening.